Hello everyone, and welcome to your financial check-in. Whether you're a seasoned investor or just starting to pay attention to your money, you're in the right place to get up to speed on what's happening in the world of finance. The date is August 2nd, 2025, and the markets are buzzing with energy. It's a day packed with headlines, fast-moving numbers, and plenty of stories that could impact your financial decisions. From stocks to crypto, new opportunities and challenges are everywhere. The financial landscape is shifting rapidly, and staying informed is more important than ever. Today we'll break down what's moving the market, big names like Meta and DoorDash, and what their stock charts are telling us. We'll explore the latest earnings, trends, and what analysts are watching closely. We'll also look at Urban Outfitters to see how consumer spending is shaping retail. Are shoppers still opening their wallets, or are they tightening their belts as economic conditions shift? Plus, stablecoins are quietly changing the financial game, impacting everything from your savings to the US government's finances. We'll explain how these digital assets are influencing the broader economy and what you should know as they become more mainstream. On the global front, new US trade agreements with Europe and Japan are set to affect jobs, prices, and investments. These deals could reshape supply chains, influence what you pay at the store, and even open up new opportunities for American businesses abroad. We'll explain what these deals mean for your wallet and your portfolio. Whether you're investing for retirement or just trying to make sense of your monthly budget, these changes could have a real impact. And with earnings season kicking off strong, we'll see if the optimism is justified. Are companies really delivering on their promises, or is there more volatility ahead? We'll break down the numbers, highlight the surprises, and help you understand what it all means for your investments. By the end, you'll be more informed and ready to take control of your financial future. Let's dive in and make sense of this whirlwind of market action together. Before we dive into analyzing specific stocks, it's important to understand a fundamental concept in trading and investing, something called a key level. This term comes up all the time in market discussions, and knowing what it means can give you a real edge. Imagine support as the floor beneath a stock's price. It's the point where buyers tend to step in, creating enough demand to keep the stock from dropping further. When a stock approaches this level, it's like a safety net. Investors expect the price to bounce back up. On the flip side, resistance acts as a ceiling. This is where sellers come in, often taking profits, and the stock struggles to move higher. It's a psychological barrier, and breaking through it can be tough. If a stock breaks below its support level, it's usually seen as a bearish signal. This means that the confidence buyers once had is fading, and the price could continue to fall as more investors rush to sell. Conversely, if the price breaks above resistance, it's considered bullish. This suggests that optimism is building, and the stock might rally as new buyers jump in, hoping for further gains. While these levels aren't set in stone or based on any magic formula, they're powerful tools for managing risk. They help traders and investors spot shifts in market sentiment and make more informed decisions. So, when you hear that a stock has broken a key level, it's worth paying close attention. Such moves often signal a major change in the stock's direction or momentum, and can lead to increased volatility. Understanding how to identify and interpret these key levels can help you make smarter, more disciplined investment choices, whether you're trading short-term or investing for the long haul. Remember, it's not about predicting the future with certainty. Instead, it's about reading the market's mood and positioning yourself accordingly so you can react quickly to changes. Mastering the concept of key levels is a crucial skill for every investor, no matter your experience level. It's a foundation that can help you navigate the ups and downs of the market with greater confidence. Now, let's take a look at how these key levels come into play with real companies and see how they can impact your investment decisions. Let's apply this to Meta Platforms, parent of Facebook, Instagram, and WhatsApp. Meta's stock was stuck between a $480 support and a $500 resistance until recently. The breakthrough above $500 was driven by strong user growth and successful AI investments. Investors saw this as proof Meta could adapt and grow, pushing the stock into new territory. For shareholders, this is a time to reassess. Can Meta hold above $500 and build a new base? For potential buyers, don't chase after a big run-up. Look for a pullback or consolidation. Meta's story is about adaptation, turning challenges into opportunities. The market's vote of confidence is clear, but discipline is key. Watch if $500 becomes the new support. In tech, the next challenge is always around the corner. Stay smart and diversified. Now, let's talk DoorDash. After pandemic highs, DoorDash struggled to break $140 resistance until a strategic pivot. The company expanded into retail delivery, partnering with major chains for same-day service. This move, plus strong earnings, pushed the stock above $140, changing the narrative. DoorDash is now seen as a logistics powerhouse, not just a food delivery app. The breakout signals belief in DoorDash's broader vision and growth potential. For investors, it's a lesson. Look beyond the obvious and spot companies reinventing themselves. Watch if $140 holds as new support. Execution on these new partnerships will be key. The story is just beginning. Turning to retail, Urban Outfitters offers a reality check. The stock broke below its $35 support after disappointing earnings and high inventory. Deep discounts to clear inventory will hurt profits, and slowing store traffic signals consumer caution. Breaking support is a red flag. Confidence at $35 is gone, and the stock is searching for a new floor. This isn't just about Urban Outfitters. It's a warning for all retail investors. When consumers feel squeezed, discretionary spending drops first. Pay attention to these signals. Focus on retailers with strong balance sheets and pricing power. Not all retail is doomed, but selectivity is crucial. The market is telling us to be cautious. Stay alert to broader consumer trends. Let's shift our focus to digital currency, specifically a new player that's quietly transforming the world of money: stablecoins. Unlike the wild price swings of Bitcoin or Ethereum, stablecoins like USDC and Tether are designed to be steady. They're pegged to the US dollar, so one coin is always worth about $1. Think of them as digital dollars that can move across the globe in seconds, 24/7. No banks, no borders, no waiting days for a wire transfer. This speed and convenience are making stablecoins essential for global payments and international business. Businesses are adopting stablecoins for fast, low-cost transactions, cutting out expensive middlemen and reducing settlement times from days to minutes. For people living in countries with unstable economies or high inflation, stablecoins offer a lifeline. They provide a way to protect savings from local currency crashes and make cross-border payments to family or friends. Here's the twist. Every stablecoin in circulation is supposed to be backed by real US dollars and US Treasury bonds held in reserve by the issuers. This backing is what gives stablecoins their stability and trust. As stablecoins grow, their issuers have become some of the largest buyers of US government debt. This demand helps keep borrowing costs low for the US government and supports the broader financial system. But there's a catch. If people suddenly lose faith in a major stablecoin, a rush to cash out could force issuers to sell off huge amounts of treasury bonds all at once. That could disrupt financial markets and send shockwaves through the global economy. Regulators are watching this space closely, weighing new rules to prevent instability. Stablecoins are now a crucial bridge between the world of cryptocurrencies and traditional finance, connecting new technology with the old financial system. Even if you've never bought crypto, the rise of stablecoins could impact your daily life, from how you pay, to how your bank operates, to the stability of the economy itself. The stablecoin boom is rapidly reshaping the financial landscape, influencing everything from global trade to government policy. It's a new force that every investor, business owner, and policymaker should understand, because its influence is only set to grow. Watch this space. Stablecoins are evolving fast, and the next chapter in finance is being written right now. The impact is only growing, and the future of money may look very different, sooner than you think. On the global stage, new US trade deals with Europe and Japan are game changers. These agreements cut tariffs, making it easier for American companies to sell abroad and for us to buy imported goods. Lower tariffs mean US products are more competitive overseas, boosting sales and profits. For consumers, expect lower prices on imports like cars and luxury goods. For investors, companies with strong international sales stand to benefit most. These deals also strengthen economic ties, creating a more stable environment for business and investment. Geopolitical cooperation reduces market volatility. When researching stocks, consider their global reach. These agreements are long-term positives for growth and stability. Your portfolio is more global than ever. Embrace it. Earnings season is here. Companies reveal their financial health and outlook. Early reports are beating expectations, boosting market confidence. Strong results from banks, tech, and healthcare suggest the economy is healthier than feared. This risk-on mood lifts the whole market, not just individual stocks. Companies are managing costs and using AI to drive efficiency, even if sales growth is modest. Investors like this focus on profitability amid inflation concerns. But stay realistic. Early wins don't guarantee a strong finish. Watch for trends as more companies report, especially those tied to consumer spending. Listen to executive outlooks for clues about the rest of the year. A strong start is good, but sustained momentum matters most. So, what does all this mean for you? Change creates opportunity for prepared investors. We've seen how innovation drives breakouts and how quickly markets punish weakness. Don't chase hot stocks. Understand the reasons behind big moves. The rise of stablecoins and new trade deals show your investments are part of a global story. Think globally, diversify, and stay disciplined. Keep funding your retirement accounts and avoid overexposure to any one sector. Live below your means and avoid debt. Stay informed. Don't let headlines drive emotional decisions. Build your financial future brick by brick. Consistency wins. You have the power. Claim it.